Welcome, dear traders. We are clearly seeing changes in Japan's price moves, with the society shaken of a 25-year-old deflationary mindset. Bank of Japan's former executive Yuji Mazda said. Yesterday's US economic data was also upbeat. The data confirmed the sustainability of consumer spending and strength of the US economy. At the same time, troubling geopolitics in the Middle East and China's economic problems continue to weigh on the Asia-Pacific markets. China's stock market has extended its downtrend and hit a four-year low. Premier Li Jian said at the World Economic Forum in Davos on Wednesday. That means stimulus measures seem to have been ineffective or insufficient so far. China's real estate crisis has worsened and spread to the financial sector. Deflation risks are rising and sluggish demand is casting doubt on the fragile recovery of the world's second-largest economy. Unlike China, the US economy continues to perform well amid high interest rates. 10-year US Treasury note yields hit 4.12% on Wednesday, its highest level in 5 weeks. After hawkish comments from Federal Reserve speakers and amid stronger than expected December retail sales data, the prospect of an imminent dovish turn by the US regulator is becoming less realistic. However, the US dollar failed to settle near yesterday's highs after strong economic data was released. The greenback moved lower in the US session and continued to fall in the Asian trading today. The US dollar index, which measures the greenback against a basket of X6 major counterparts, moved within a daily range of 103.10 and 103.40 early Thursday under certain pressure. The greenback showed a pullback from its 5-week highs to the 103.70 mark despite strong US economic data and cautious market sentiment. For the most part, falling US Treasuries and the strengthening of the euro after the hawkish speech of ECB Chief Christine Lagarde at the Davos Forum explains its bearish momentum. On the other hand, the US dollar is being supported by safe haven demand. And yesterday, the Beige Book saw a revised median forecast for the Fed funds rate. The Beige Book represents a report on the current economic conditions in each of the 12 federal districts, and the dot plot was revised downward to 4.6% from a 5.1, pointing to a lower level of a Fed rate cuts for the end of 2024. This was a hawkish signal for the US dollar. Meanwhile, markets will likely wait for a new batch of the US statistics to better understand the situation today. Therefore, the US dollar index may surge toward the technical resistance level of 103.70, and a fresh rally for the greenback is not ruled out. The next support levels are located at 103.00 and 102.70. The Japanese yen was in demand early Thursday and managed to recap some of its weekly losses against the greenback. After 3-week sessions in Asian trading today, the pair was trading in a range of 147.60 and 148.30. Against the backdrop of troubling geopolitical news and ongoing concerns about slowing economic growth in China, the yen benefited from its safe haven status. However, we should not expect any serious strengthening of its exchange rate in the near future. The chances that the Bank of Japan will decide to change its ultra-loose monetary policy at its meeting on January 23 are close to zero. Nevertheless, the weak US dollar may allow the dollar-yen pair to move deeper into the bearish area to the support at 147.60 or even to the 147.00 level. Technical resistance is located in the 148.00 and 148.40 range. Meanwhile, investors are not expecting any changes in the Reserve Bank of Australia's policy. On the back of strong economic reports and a stable unemployment rate, the regulator is likely to leave the interest rate unchanged. Looking ahead, Australia's central bank will hold a meeting in January. Before the monetary policy outlook has a little impact on the Australian dollar, the Aussie began to rise during yesterday's US session on the back of a weakening greenback. The Australian currency has continued to soar today. In the Asian region, the Aussie dollar pair experienced several volatile ups and downs within the daily range of 0.6520 and 0.6570. Notably, the spike in the oil prices has been the main driver of its growth. There are threats in the Red Sea and the Suez Canal. Tankers are taking longer routes that bypass the region. Against this backdrop, the time and cost of delivery is increasing significantly. In addition, production levels in North Dakota have been reduced due to the extreme cold weather in the United States. Therefore, the Aussie's bullish momentum may continue in the near future. In such a case, the Aussie may try to hit its high near 0.66. If it fails to reach this level, the price may retreat to the technical resistance level of 0.6530. The New Zealand currency also remained in the bullish territory during the Asian session. It rebounded from a multi-week low of 0.6080 and rose above the key of 0.61 level. However, the Kiwi's upside potential is largely limited by the weakness in the Chinese economy. As a result, the Kiwi dollar pairs increased within the daily range of 0.6100 and 0.6140. Looks moderately early Thursday. With the master technical indicators pointing to bearish momentum, the Kiwi may fall back to the 0.6100 and 0.6080 support zone. The resistance is located at 0.6160 and 0.62. And that's all for now. Stay tuned for more updates with the InstaForex TV. We appreciate your feedback. Please leave your questions and comments below and see you online soon.